Volkswagen, headquartered in Germany, is one of the world's largest and most recognized car manufacturers. Founded in 1937, Volkswagen is well known for producing and selling a broad range of cars, from affordable models to premium and luxury vehicles. Its operations span globally across numerous markets and involve substantial investment in production, research and development, and distribution. As we know, the balance sheet is divided in three parts: assets, liabilities, and equity. Non-current assets dominate the asset structure, totaling to 360 billion euros, reflecting Volkswagen's capital-intensive business model. The high share of intangible assets and property, plant, and equipment aligned with its investment in technology, branding, and global production facilities. Financial services receivables also form a significant portion, showcasing the company's involvement in financing and leasing activities. Current assets make up a small but substantial share, driven by inventories, financial services receivables. The liquidity position is strong, with cash and marketable securities reflecting a solid cushion for operational and financial flexibility.
Now, looking at the equity and liabilities section of the balance sheet, the liabilities are divided into current and non-current liabilities. The most significant accounts in equity and liabilities in Volkswagen are, first, retained earnings. This is crucial as it reflects accumulated profits after dividends. And the financial liabilities are essential as they indicate Volkswagen leverage and financial obligations, impacting interest expenses and risk during economic changes. And also, the negative balance in other reserves in equity is important as it reflects losses from foreign currency adjustments and fair value changes. Looking now at the total equity in the balance sheet is 189,912, while liabilities amount to 410,426. As we look at the assets and the liabilities plus net equity, we found that they both equate to 600,338.
In the income statement, we have a total of 322.284 million in revenues and 261.262 million in cost of sales, which made a gross profit of 61.022 million. Additionally, we see that this distribution and administrative expenses are quite important, which made an operating result of 22.576 million. Furthermore, his financial result is 618 million with an important expense and income interest. On the other hand, we need to analyze his earnings before and after taxes to see if it's profitable or not. As we see, it has a 23.194 million before tax and 17.928 million after the taxes. This makes Volkswagen profit.
Volkswagen reported a net profit of 18 million euros approximately in 2023, making a 13.1% increase from the 15.8 million euros of 2022, which reflects a strong profitability. The distribution to non-controlling interest increased sharply to 1.3 million euros from 395 million, while Volkswagen shareholders were given 16 million euros compared to 14.8 million, showing better returns for investors. Sales revenue and cost of sales surged by 15.5% and 15.2%, which indicates an effective cost management. Furthermore, there was a rise in distribution, administrative and other operating costs, but they remain controlled within the increase in revenue. Finally, we can conclude that Volkswagen has a successful year in 2023, with strong financial growth, effective cost management, and improved profitability as shown in its income statement.
In conclusion, Volkswagen gross profit margin stands at 18.9%, a slight increase from 18.7% in 2022. Was profitable by a gross salary of approximately 61 billion on a total revenue of 322.3 billion, an impressive increase from the previous year due to improved supply chain conditions and favorable market positioning.